CNBC's own Deirdre Bosa actually spoke with Uber CEO Dara Khosrowshahi and asked him just point blank, when does Uber break even? Here was his response.
We increased our 2019, the midpoint of our guidance in as far as EBITDA goes by $250 million. And I'll tell you, Deirdre, while we haven't finalized our planning, and it's going to take a lot of hard work from a lot of folks, we are actually targeting 2021 for adjusted EBITDA profitability full year.
I also checked in with Oppenheimer's Jason Helfstein just to get his take on the quarter. In his opinion, the quarter was solid, Melissa. He says the ride business was quite healthy. His words, revenue was there up 23%. The street was closer to up around 16%. He says there will be questions, though, around Eats, specifically with revenue largely in line on lower Eats gross bookings. Profitability metrics, at least versus his estimates, he said were better than expected. He was actually modeling 2022. So Dara's goal there, 2021, a year ahead of schedule for him. On the call, which just started, Dara Khosrowshahi starting off right about regulations, knowing that they'll continue to focus on productive engagement. He notes how regulations here in California have certainly generated a lot of interest. Remember, lawmakers here would require gig economy workers to be reclassified as employees instead of contractors. Dara Khosrowshahi says they're putting a ballot to voters here in California on that issue. And finally, let's remember, this isn't just the only news we get about Uber this week, that its IPO lockup does expire on November 6th. Back to you.
Josh, thank you. Josh Lipton in San Francisco. What do you make of Uber so far? I mean, it's interesting, the reaction to Uber stock here compared to when Lyft said that it would be also adjusted EBITDA profitable by 2021, which is a year. Yeah, same time frame, year earlier than expected. And we have a down 6% in Uber.
It just sounds, first of all, that was not emphatic. There was nothing I heard.
No.
It was like, maybe we'll model it out. Maybe we'll get there. We think we want to get to a place where we're EBITDA positive by, Q4 2021, which Lyft's already gone out there and said, I think, in a much more succinct way. There's a couple things here. You have this lockup avalanche that's coming out. You have they've broken the company down into 5 core businesses, but there's really only 2. And I think a lot of people would rather only see 1. So this is the whole dynamic here. And if you look at, there was some stock compensation issues which added significantly to the loss. And I think people are concerned about that kind of stuff. So, there's nothing here that makes you think that they've turned the corner. And if you look at a structural lack of profitability, I don't think you stop thinking that as of now.
Well, it's interesting. We're getting a sense just year over year. Think about this. When VCs were investing in this company, and they were investing last year, okay, they were investing for these other levers. They were investing so they could grow Uber Eats, that sort of thing. The public markets are speaking here. They don't like the fact that one business is subsidizing the other and the whole is losing money, and therefore we can only say we are targeting EBITDA positive 2 years out from now, or whatever the time frame is. So listen, this company very soon is going to actually have to scale back their ambitions for things other than rideshare and autonomous, because at the end of the day, if they're telling us that they can be positive in rideshare or they can be profitable in rideshare, then the public markets just aren't going to put up for it. And that, what I think is going to be a really interesting thing to see over the next year or so, which brings us back real quickly to Lyft, why it did perceptually, it kind of acted a little bit better when they said this, because they're just North American rideshare.
Right.
Yeah, people like the business model, I think, of Lyft right now, at least. Right now, they like that model better. And because of that, you just mentioned it, I mean, that's the thing that stood out for me is they continue to lose money at an unbelievable pace. Yeah, they're going to make money in 2021, so we finally have a path for profitability. But, Mel, that's still out there enough that you've got to be very patient if you're waiting for Uber and to see, can they transform the company into the company they think they can?
Right. For more reaction to Uber earnings, let's bring in Loup Ventures founder, Fast Money friend, Gene Munster. So, Gene, we see the reaction in the stock. We heard what Dara Khosrowshahi said about being profitable. Do you believe him?
Melissa, no, I think it's going to take a long time. And I totally agree with Dan that they're going to have to cut some project to ultimately get there. A lot of the language would have expected that the stock trades a little bit better in the aftermarket. I think the market's sending that same message. This is just a little difficult to believe.
We have a lockup expiration as well coming down the pike this week. And some estimates say 90% of the shares outstanding will become eligible for trading, Gene. In your view, could that be a buying opportunity at all?
I think for people who have a 5-year outlook, it's a buying opportunity, Mel. I think if you have 1 year, this is still essentially venture capital. I think that's the best way to think about investing in Uber here. I'm going to go out on a limb and say that they're going to be cutting some of these other projects. The Adami project, ultimately, still surprised that that's around, especially given some of the litigation. Those are other things that can kind of corrupt the stock in the near term. And so my belief is this is an undeniable opportunity around the way people are moving, autonomy, that future. Uber and Lyft both have a pole position within that. But as far as investing in the near term over the next year, it's still going to be a wild ride. And I think tonight's results and the reaction to the stock and the aftermarket's evidence of that.
Hey, Gene, they talk about that ride EBITDA, adjusted EBITDA is up 52% and will now cover corporate overhead costs. What does that statement actually mean? Because that makes it sound like they could be profitable on this core business. And, Dan was talking about the fact that the other businesses aren't going to be supported by a core that's not even profitable. Is it profitable now? And should people take heart in that?
Well, I don't think that they should take heart in that, and ultimately because they have these other businesses. This is the reason why I think that Lyft is the better play here. And so, yes, it is some sign. It's a positive indication around that. But again, this company has some massive kind of a view of the future. It's not just eats, it's freight, it's jobs. They have the autonomous project going on. So, yes, that is a positive sign, but ultimately I think there's some bigger X factors in play. And if I was going to kind of, Tim, put all this together, I generally agree. Things are inching in the right direction, but ultimately this company has a lot of work to do.
Clearly a lot of work to do, but you mentioned freight. I mean, I think freight revenue's up 85% year over year. Is that a place where maybe they're going to catch lightning in a bottle, or is that just sort of an outlier, Gene?
Still too small. I think that this is this is a business that it's nice to talk about those kind of growth rates, but it's such a small part of the overall business. I don't think we can put too much into it. There's something else I want to point out when we think about this kind of the road forward here with Uber that Josh mentioned. And this concept about the litigation that's going on, or I should say the regulation that's going on. State of California, they talked about 9% of their rides come from California. But something caught my attention when the CEO was talking about this, and he said that Lyft, along with DoorDash, this is well known, but Lyft, DoorDash, and Uber are all getting together to really tackle this legislation and come out with a new ballot, essentially that's more fair to the ride-sharing players. And I thought that the fact that those three, which are fierce competitors, are working together on this, I think it speaks to the significance of what's going on around the regulatory environment. And as an investor, it's important to realize that these are not solved overnight. But if you take the step and say that there's going to be more generous treatment of the drivers over time, that puts this target of profitability into 2021 as essentially a best guess kind of perspective.
All right, Gene, we're going to leave it there. Thanks for your time. Good to see you. Gene Munster of Loup Ventures. I think that's a good point. I mean, if that is going to be an issue, then that will really impact whether or not either of these companies can hit those 2021 profitability targets.
Right, and I guess the point that he's making, and it's kind of the point that I made, is that Lyft is just, you can draw a straighter line. I mean, even if they're not profitable right now, and that's the only thing they do, and Uber's saying we could be profitable in that business. They have much greater market share, and they've spent a lot more to get there. I'll just make one point. We saw this with WeWork. We saw valuations. We saw a $47 billion valuation go to $7.5 billion in a matter of weeks. Don't think you couldn't see that again in the public markets. But by the same token, think about the leverage. If Dara decides to light VC capital on fire that they raised over the last couple years before he was even CEO, the public equity is going to rip, meaning if they were to pull the cord on Uber Eats, which is what VCs were funding, then this thing would be valued, I think, higher because people would say they're going to get to profitability faster.
All right.